SoFi and Upstart operate in similar markets, with SoFi offering more than what Upstart offers. Upstart is a more narrow product market focus, whereas SoFi wants to be everything you can ever need in your financial life. Today, I'm going to compare these two fintech stocks and answer which one I think makes the better buy at current market prices. So let's jump right into it. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The first thing I wanted to compare these two fintech stocks on is their revenue growth going all the way back to 2017. SoFi is more consistent in its revenue growth since 2018, where its revenue grew from 300 million all the way up to 3 billion, nearly 10x in roughly 7 years. That's good for a compounded annual growth rate of 27% going all the way back to 2017. Meanwhile, Upstart has grown its revenue from roughly 100 million in 2017 up to 900 million in the most recent trailing 12-month period. That's good for a compounded annual growth rate of over 41% in that time. Looking forward, I expect Upstart will grow its revenue quicker than SoFi will grow its revenue because Upstart's business model is more beneficial, benefits more from scale and less capital intensive. Upstart tries to be a platform that brings together borrowers and lenders and uses artificial intelligence to make lending decisions. That model scales better than SoFi's model, which does more than just that. SoFi has that same part also, where it originates loans and sells to third parties, but SoFi also holds a large percentage of its loans on its balance sheet. Upstart also owns its loans on its balance sheet, but not because it wanted to, but because of unique circumstances in the market in late 2022 that forced Upstart to own more of the loans on its balance sheet. I think longer term management hopes that it's not going to be in the business of owning any loans, but just originating and then having it be a platform that brings together two sides of the equation. Upstart, I think, has much bigger upside, whereas SoFi is broader, safer, more consistent, and has tailwinds stemming from the business model of online only, where legacy branches, legacy banks have underinvested in their brick and mortar facilities, their brick and mortar locations, and so they're not taking advantage of that advantage they have against SoFi. Each of these companies, SoFi and Upstart, has excellent long-term prospects. They have great business models that I think will continue to capture customer growth and market share in their respective industries. The next factor I wanted to compare these two on is return on invested capital. And in this metric, Upstart had experienced headwinds starting in 2022. Remember, Upstart makes loans, and those loans are purchased or, for the most part, funded by third parties that go on the platform. Well, in 2022, the central bank started increasing interest rates, which increased the probability of recession in the United States. So lenders were not interested in making these kinds of loans. These are the riskiest kinds of loans. For the most part, they were personal loans. And so lenders pulled back on the platform. And so there wasn't funding available for all the borrowers that were coming on the Upstart platform. And so Upstart had to use its own money to make these loans. And the number of loans that they funded or that were being funded on the platform significantly decreased. That was a huge headwind for Upstart. SoFi, meanwhile, has more broad-based growth. The company's lending portfolio has been improving and making more loans and also selling those loans to third parties. But SoFi also has a technology services segment where it sells its technology to enterprises that are looking to implement similar technologies. SoFi also has apps and investment services and other products that it offers to its customers, credit cards, checking accounts, etc., that generate revenue and capture customers, and it's able to cross sell. So once it acquires a customer, it can sell that same customer all these different products, and it's cheaper to market those products to an existing customer. You already have their email, their phone number, their address, and so it's less costly to market to those customers that are already part of your ecosystem. Its return on invested capital has been increasing all the way to 7.2% from negative 5.8%. And Upstart, since bottoming at negative 14.8% in 2023, is improving meaningfully to negative 1% in the most recent trailing 12-month period. So the last thing I wanted to compare these two on is valuation. And you can notice a big divergence in valuation around August of 2025. You can see these two companies typically go in tandem in terms of the valuation. When one valuation increases, the other valuation increases. But since August of 2025, they went in opposite direction, with SoFi stock becoming extremely expensive. Well, I shouldn't say extremely, but just expensive. And Upstart stock having a big decrease in its valuation. It's now trading at a forward PE of 26, which is near the lowest you've been able to buy this stock according to this valuation metric. SoFi, meanwhile, is trading near the most expensive it's been, and it's one of the reasons why, I've had SoFi stock rated as a buy all year, but when it was up 85%, I downgraded SoFi stock to a hold. And since then, the price was around $30 when I downgraded it. It's been down. It's not down by all that much, but it's down since I downgraded it to a hold. And one of the reasons why I downgraded to a hold is because of this expensive valuation, or a valuation that was getting very expensive during a moment in the US economy where the risks are increasing. Meanwhile, Upstart stock is responding the way I would expect, with the risks of a recession increasing in the United States. The valuation is decreasing as I would expect, and it's trading at a PE of 26, which I think is ridiculously cheap for the upside you're getting with Upstart. Now, Upstart is a riskier stock compared to SoFi, but it also has much bigger upside. If its AI lending model proves to be anywhere near as effective as legacy methods using, the FICO score, etc., to make lending decisions, then Upstart is going to capture a very large market share in a multi-trillion-dollar total addressable market opportunity, because making its loans using artificial intelligence is much less costly than traditional methods of making loans. So if the performance of those AI loans, or loans using AI for the due diligence, for the qualifying of borrowers, if it's anywhere near as effective, it's going to capture much more market share because of the lower cost. And so it's going to benefit Upstart much more significantly. So because of those reasons, if I had to pick between these two fintech stocks today, Upstart would be the stock that I would buy compared to SoFi. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.